All right, good evening, everyone. Thanks you for dialing in for tonight's corporate webinar. Here we have Perak Transit Bhd. We're going to honor to have here the company CFO, Jennifer. Hi, Jennifer.
Hi.
Hi, and then they just released their Q3 financial 2025 earning result. As usually you know, Perak Transit Bhd is involved in the operation of integrated public transportation terminal in Perak, and Jennifer will provide us with highlight of other information. Without further ado, we'll start the presentation. Over to you, Jennifer.
Thank you, Shane. All right, good evening to everyone. Once again, thank you, Rakuten, for organizing this briefing, and thank you everyone for joining. So as usual, we will basically go through the presentation slide, then followed by a Q&A session. Okay, so the first slide here is in regards to three of our core activities in regards to the revenue and also the EBITDA for the 9 months ended 2025. Okay, so our major contributor here remains with the terminal operations, which contribute approximately 69.7%. So in quantum is approximately 102 million, whereas for the EBITDA is approximately 97.8 million for the terminal operations. Okay, next is our stage bus operations. So our total group revenue is consists of 12.9%. In quantum is around 18.9 million. Okay, so in regards to the EBITDA is around 4.6 million. Okay, so next is our petrol stations operations, which consists of 17.4% of our total group revenue. In quantum is around 25.5 million. Okay, so the EBITDA is 0.9 million. Okay, next we will drill down into more details in regards to our financial. Okay, so our annual earnings in regards to the 9 months ended 2025. So the revenue is 146.6 million, as the EBITDA is 108.4 million. PATAMI is 59.5 million, which derives the EBITDA margin of 73.9% and PATAMI margin of 40.6%. If you look at the quarterly earnings, the third quarter results, so the revenue is basically consistent at 49.1 million. Okay, whereas the EBITDA is around 36.1 million. PATAMI also consistent at 19.9 million. EBITDA margin is approximately 73.6%, and the PATAMI margin is approximately 40.4%. Okay, so the third quarter revenue basically decreased slightly around 5.7% year-on-year and decreased around 0.1% Q-on-Q. Whereas for the PATAMI increased by 12.1% year-on-year and decreased slightly around 0.2% Q-on-Q. Okay, next slide is in regards to our segmental revenue breakdown. So our terminal operations basically decreased slightly around 3.7% year-on-year and decreased around 3% Q-on-Q. So this is mainly due to lower contribution from project facilitation fees. Our petrol stations operations basically decreased around 10%, and there is a slight increase of 1.2% Q-on-Q. Okay, so basically the decrease is mainly due to lower smart sales being recorded. Okay, so for our bus operations, there is actually a slight increase of 1.5% year-on-year, and there is an increase of 15.5% Q-on-Q. Okay, so basically the increase is mainly due to higher contribution from the stage bus service transformation program. Okay, last but not least is our telco tower construction operations. So there is no revenue being recorded in the third quarter because we haven't secured any new telco tower construction site in the third quarter itself. Okay, so next slide is in regards to our quarterly EBITDA breakdown by operations. Okay, so in regards to the EBITDA margins, so our terminal operations EBITDA is always above 90%. Okay, so mainly due to majority of our costs have already been capitalized, for example, construction costs. So our OPEX is only left with manpower, utilities, maintenance, and so forth. Okay, so in regards to the bus operations, the EBITDA margins is approximately 29% in the third quarter, and petrol stations is quite stagnant at around 4%. Okay, next slide is we want to drill down into more detail in regards to our terminal revenue breakdown. So if we look at third quarter itself, Okay, so the one in dark green is actually rental of advertising and promotional spaces. So it has been consistent since fourth quarter, since we have commencements Bidor Central operations, which is consists of 13.2 million. So it's a fixed monthly revenue being recorded. So the one in light green is actually the rental of shop and kiosk, so around 16.7 million. Okay, so that will be a fixed revenue model, fixed rental model, and also revenue sharing model. Okay, so the one in yellow is actually the project facilitation fees, which is the advisory services provided. Okay, which is around 3 million. So the rest of it very minor, is like terminal management services, terminal management system, entrance fees, and profit sharing. So if you look at below, there's a pie chart in regards to our 9 months revenue breakdown for the terminal operations. So the one in the light green, 49% is the rental of shop and kiosk, which is the higher contributor here. Second highest is 39% rental of advertising and promotional spaces. Thirdly is the project facilitation fees, 10%. The rest of it is 1% each. Okay, next is actually in regards to our dividend, for interim dividend that has been announced. Okay, so it's 0.0025 per shares. So to be paid on the 13th of February 2026. Okay, next slide is in regards to our net gearing ratio. Okay, so you can see that our net gearing ratio basically have decreased from 59% to 55% in the third quarter. Okay, so our total equity have improved from 798 million to 848 million in the third quarter. So total borrowing have decreased from 746 million in second quarter to 728 million in the third quarter. So due to the quarterly repayments of the Sukuk program. Okay, and our total cash basically is around 261 million in third quarter. Okay. Okay, next is in regards to our business update. So we always start off with the lower concentration in the project facilitation fees, so the consultancy services. So you can see that if we compare to last year 9 months 2024, so the concentration in these segments have decreased from 19% to 7%. So even with this decrease, so our total revenue profits is actually maintained almost the same lah. Okay, so if we compare to the last quarter lah, if we compare to the comparison to the 3 months ended 2024, there is even an improvement in terms of our top line and bottom line. So we always say that there is a lower concentrations in this segment because we focus on what we are doing good at, which is the terminal management. So this is an ad hoc revenue that we have. Okay, so next, then we have our first developed, own and operate terminal. So which means that the land and building is basically owned by our company. So the first terminal is Terminal Meraya. So it's a 2-story building with a basement car park. Okay, so the bread and butter is always the terminal operations and the ground floor. Then for this terminal, we have event hall, travel agency, convenience store, office, eateries, and retailers. Okay, then first floor, we have TVET Academy. We have karaoke, snooker, eateries, and retailers. Okay, so the for this terminal, because it's our first terminal, so the net leasable area is not very big. It's only around 57,000 square feet. So, but our current occupancy rate as at September is 83%. Okay, so this terminal is more focused on the target market is more focused on the passengers because there is 63 express bus operators that is operating in our terminal. Then with the terminal management system being implemented in the terminal, so we are selling the bus ticket, the express bus ticket on behalf of the express bus operator. So then in return, we will have income such as the sales commission, facilities charges, then we will have boarding charges, bus entrance fees, and so on. So in a year, there is around 2 million of footfall traffic that pass by our terminal. Okay, so this is basically the target market lah. So it's more towards the passengers and the local residents. Okay, the second terminal is even bigger. It's basically an 8 times bigger than the first terminal. Okay, so the net leasable area is around 300,000 square feet lah. So it's actually 8 times bigger. So it's actually an 11-story building. So the ground floor will be the bread and butter, which is the bus terminal. Okay, then we will have electrical shops, eateries, retailers. Then first floor is furniture and renovations tenants. Then second floor is UTM. Then third floor will be intended for food court and 2 ringgit shop. Fourth floor is roller skate, jar blaster, and drift cart. Then fifth floor is the badminton. Sixth floor is the go-kart and eateries. Seventh floor is bowling, cinemas, ballroom, and intended for restaurant. 8 to 7 is intended for a budget hotel lah. Then 11th floor is actually intended for the sky lounge and so forth. So Kampar, we know that it's a second-tier city with students from Utah, Keta, Westlake International School. So it's around 30,000 of students and around 100,000 of local populations in Kampar and surrounding town. So basically in Kampar, there is no supermarket, but there is hypermarket lah. So the nearest supermarket is to have a 45-minute drive back to Ipoh. So our offerings here, you can see that it's more towards the entertainment, sports centers, and so forth. So the current occupancy rate as of September is around 75%. So target market here is more towards the students. Okay, so the working adult at the universities and also the local residents. Okay, so here are some of the pictures of our existing tenants. So this is the cinema. So this is the badminton. Okay, so this is the bowling and also the go-kart. So this is the ballroom, which can cater for hundreds tables for weddings, for events, and so forth. So this is the PLSC Entertainment Center, roller skate, jar blaster, drift kart. Okay, so this is the terminal management system that I mentioned just now, but this PTMS is actually our in-house terminal management system lah. So currently it's being implemented at Kampar and also Bido. Okay, so with this, in the old days, normally the passengers will purchase the ticket through the each of the express pass counter. So there will the express pass counter, the agents itself will compete among each other, the fares and so forth. So we basically list these counters to the express pass operators lah. But now with this PTMS being implemented, so passengers can now purchase the bus ticket online, self-service kiosks, or the designated the counters. So the counters will basically managed by us. So we will be selling the ticket on behalf of the express pass operators. So for the operators itself, they only need to register with us and then to basically key in the data, the trip, the bus number, the frequencies, the timing, and so forth. Then the passengers can freely choose which one they're actually more preferable to purchase the bus ticket from based on branding, pricing, timing, and so forth. Okay, so this is actually called PTMS lah. So the bus that enter into the platform is actually through the RFID scanning, and then the passengers enter into the waiting areas is through QR code scanning and so forth. So this PTMS will be implemented to further will be implemented to those terminal owned or be even managed by our company. So this one is the third terminal, Bido Central, commenced operations in September 2024. Okay. Okay, so Bido Central basically have 3-story building. So the ground floor is again the bus terminal. Then we have supermarket as our tenant, which is TF Value Mart. Then we have clothing store, F&Bs. Then first floor is the bowling alley. Second floor is the badminton court and pickleball court. So for this Bido Central, so the net leasable area is around 182,000 square feet. So the target market here is as a diversified populations. So one is in regards to the passengers. Secondly is the local populations. Thirdly is the students itself. Fourthly is the factory workers. Then fifthly is actually the tourists lah. That actually Bhd is actually an important access route to reach Cameron Highland. Okay, so this is actually the TF Value Mart lah, opening pictures. So this is our existing tenant, badminton court. So this is the pickleball court. Okay, so to summarize, so there's 3 terminals that are being completed and commence the operations. So 2 under future pipelines, so currently under construction, which is Tronoh Central and Sri Skandar Central. So Tronoh Central, the land size is bigger, 16.64 acres. Okay, so this terminal is also cater for the students lah, university students and so forth. Okay, so whereas for Sri Iskandar Central, the land size is around 5.36 acres. So this just behind of this terminal is a newly opened general hospital lah. So this terminal is more to cater other than the local populations, but also to the patients, the family members, the working adults in the hospital. So the model is the same. So we replicate the model, not only a traditional bus terminal, but is lifestyle, is a mall, it's a entertainment center, it's a sports center, and so forth. So there is a lot of elements being incorporated in the terminal. Okay, so here are some of the pictures that I want to share is in regards to the stage bus service transformation program. So we have actually in February 2025, we have launched this bus stop My Ipoh is a pink color buses in Perak itself. So this contract is for 5 years period. The contract value is 65.85 million value. So we have also acquired 55 units of new diesel buses to cover 17 routes in Perak. So this is actually considered a renew contract lah. So initially we obtained the first contract in 2016. It's an 8 years contract. So we have already fulfilled all the services and so forth. So the contract ends. Then after that, we basically tender this project and being awarded lah for 5 years with 65.85 million value. Okay, so this is in regards to the bus operation. So this is in regards to the new asset-light business, which is the terminal management contract. So instead of we develop and build on our own, which might take times 2 to 3 years to complete, and then the capex it will be very significant, 200 to 300 million per bus terminals and so forth. So another asset-light business that we can actually expand our growth is that we identify those potential terminals that is currently owned and operated by the local council. So we step in to help them to operate and also upgrade the existing terminal owned by them. Okay, so basically we will do some renovations, change some equipments, the facilities in the terminals, air conditioning and so forth. Then in returns, we will actually receive rental income from the shop and kiosks that we have rented, and then also from the terminal management system. So the sales commission from the ticket sales, then facility charges, boarding charges, bus entrance fees and so forth, car park fees and so forth. So the first terminal that we have secured is Terminal Central Kuantan in 2021. It's a 9 years contract since 1st February 2021. Okay, so the capex being spent is around 3 million. Okay, so with low capex but faster growth in that sense. So the first terminal is a fixed management fees model, which is 100,000 per month. Okay, with a minimum increment of 3% per year. Okay, so this one have already commenced operation since 2021. So the second terminal that we have secured is Terminal Bashar Perdana Alostar. But this terminal we haven't commenced yet, haven't done any renovation yet and so forth. So, but the contract is for 15 years. So the capex is around 6.5 million. Okay, so the revenue will be coming from the rental income, and also this one is more on rental income. Okay, so the third terminal that we have secured is called Terminal Police Central. So we have commenced operation since March 2025. Okay, so this is a direct sign of contracts with the local council, the Majlis itself in Perlis. Okay, so existingly there is 27 units of 27 express bus operators operating in this terminal. So the contract period is 15 years. So the capex is around 3 million over 15 years period. Okay, so the revenue is basically from the rental income, the terminal management system, car park fees, taxi fees, and so forth. Okay, so moving forward, we actually would like to secure more this kind of terminal management projects, which actually can give us lower capex spends, but faster growth in terms of our top line and bottom line. Okay, so last and not least is the telco tower constructions operations. So we are one of the contractors of EDOTCO. So we have already completed 11 projects lah. So some are from Perak, Pahang, Kelantan, and so forth. So currently those projects that we have completed are 4G's projects, but we are not only restricted to 4G's towers, but we are also can build 4G's and also 5G's towers. Okay, so this is the master framework agreements that we have secured with EDOTCO. So we help them to construct and maintain the tower itself, but it's a turnkey project. So once we have completed the construction, we'll pass back to EDOTCO. Okay, so the last section is actually on the ESG initiative. These are basically extracted from our 2024 annual reports. So just would like to highlight that we have intentions to acquire EV buses and also to install EV charging stations in our terminal, petrol stations, or even other strategic locations. For example, EV charging hub. We can even do a hub lah. Okay, so and then we have also previously announced that we are also going to launch Smart Bus Stop. Okay, the first Smart Bus Stop in Ipoh, then basically slowly to expand to other state and other location. So thank you very much, and we can open up for Q&A session.
Okay, thank you, Jennifer, for just now the presentation. All right. Okay. Is it good if I separate like the business operation with the share price question because they're quite a lot?
Can is up to you.
All right. Okay. Now we discuss for the business operation. After that, we will discuss for the share price. And for the first question, okay, what are your targeted occupancy rate for Gambir Putra and Bidor Central in the coming quarters?
Okay, so currently Gambir Putra Central, the occupancy rate is already around 73%. So targeted is around there, is around 75% in the coming quarters. So then slowly expand it to 80% and so forth. So whereas for Gambir Putra Central in September is already 75%. So our next target then it will be 80%. Okay, then for Bidor Central, current occupancy rate is, as of September is 68%. So our target is to reach 70%, then slowly increase 5% each lah. So 75, 80, 85, 90.
Okay, quite good. Okay. Oh, all right. This question a bit long about the trade receivable. Could you elaborate on the reason behind the 130% year-over-year increase in the trade receivable from 28 million to 66 million?
Okay, so in regards to the increase in the trade receivable is due to a slow payment from our terminal tenants lah. So basically it's from there. So but we have already put in place an installment plan. So currently they are paying according to the installment plan lah. Okay, so basically for the tenants itself, the security deposit that we are being collect is actually 2 months. 2 months security deposit.
Okay, 2 months security deposit. And also just now you said like for how many term for they to repay?
Okay, so basically the credit term is 90 days.
90 days. Okay. Like in worst scenario, how confident are you in tenant ability to repay their outstanding rentals?
Like I mentioned, because this increase in the trade receivables is due to the slow payment for our major tenants lah, basically the major one. So we have already put in place the installment plan. So we are currently monitoring closely lah on whether they pay according to the installment plan, which actually currently is paying lah according to the installment plan lah. So if there is any late or there is any uh, they actually doesn't pay according to an installment plan, then we will talk to the tenants again and so forth. So we have to make sure that they actually clear off the outstanding amount.
And then according to your financial statement that you also hold 261 million in cash. Yeah, this is quite safe for the company. And then you also have, just now you say you secure for 2 months the security deposit, right?
Yes, 2 months.
Okay. Okay. What is the remaining contract tenure for the affected tenants?
Okay, so the affected tenants is actually yearly renewal contracts, but we have already renewed with them for almost 10 years. Okay, so this is not new tenants and so forth. It's actually a very long-term relationship tenant, I can say. So why the contract is actually renewed every year? It's actually a auto renewal lah, if both party doesn't have any issues with the terms and so forth. So because every year so that we can actually negotiate for a higher rental rate lah, based on the footfall in the terminals, like the increase in the spaces. For example, the printing media become digital platforms and so forth. So we can actually negotiate for a higher rental rate based on the footfall traffic every year and so forth. But this again, this has been renewed for almost 10 years lah.
If this kind of situation, would you suggest like change about this business model to sign like long-term contract, like not auto renew
For the
forever?
time being, we do not have plans to change the tenure of the contract lah. So because the tenants doesn't raise any concern in regards to that. So currently it's just the slow payment which we have already take action lah. So have an installment plan in place. So they are also currently paying according to the installment plan. So if in future that there is any like situations or anything, if that doesn't pay into installment plan, then we will think of other strategies or even measures to actually to tackle this lah.
Right. Okay, just now you also say like other business sector, there's a question follow up. If certain tenant choose not to renew or continue with you, do you already have a pipeline of potential replacement tenants?
It depends on the type of tenants lah. For example, if we have to look at the nature of business also lah. So normally for the shop and kiosk tenants, normally they will sign for minimum 3 years lah. Okay, so like those anchor tenants, for example, cinema, badminton, bowling, all those, so they will sign longer. So some is can the highest can go up to 15 years. So some is like 6 years, 9 years, and so forth. So if potential replacement tenants, so if for example lah, the badminton tenants doesn't want to renew, then we will try to look for similar tenants, either that are doing badminton or pickleballs that doesn't need to basically spend a lot in renovating the whole place and so forth. So because we have 3 terminals in hand, and then also those terminals that is under management currently. So we have a range of tenants that actually follow us lah, from like from maybe Gamba to Bito. So it actually have a same tenants or even different tenants, but doing the same business. So even if, for example, the existing tenant doesn't want to renew, then of course they will need to give us notice lah. So we will have time to actually go and engage the existing tenant. Oh, okay, so you are the badminton operators at Kampa. Do you want to come to Bhd? Because there is a vacant space now. And then if they are interested, then we will actually sign contract with them lah. So even not that, so because we also have our in-house and also outsourced marketing team to actually help us to source for tenants lah. So basically, our model is that the tenants actually follow us from the terminals. So and then even though if they are not interested at that spot, so we will have our internal and also our outsourced agent to help us to look for tenants, and then with the notice period is actually sufficient time for us to replace that.
Okay. Just now you mentioned about the same tenant can across the different terminal you hold it. Like for the major tenant you mentioned just now that delay for the payment, is there also same with it like across the three terminal they
Yes,
have?
correct.
Right. Okay. Okay. Then should we expect quarter four performance to be affected by the rise in the receivable and late payment? If yes, to what extent and what mitigation strategy are you implementing? I think just now you already speaking. Yeah. Do you have anyone to add on?
So basically, if they are paying according to the installment plan, so basically the revenue is actually recorded based on the invoice being issued lah. Okay, so even though there is an increase in the receivable, for example, third quarter, so but is actually still collectible. So it is not the bad debts or anything. So it basically doesn't affect the top line and the bottom line.
Okay. Could you provide an update on the progress of Toronto Central and Sri Iskandar?
Sure. So the construction status for Toronto Central is around 44% currently. So for Sri Iskandar is around 28%.
Okay. Is they still on track for their progress?
Yes, so Toronto is still expected to be completed next year, and Sri Iskandar is in 2028.
Completed next year is second half quarter or end of the
Second
year?
half.
Second half lah. Okay, sure. Okay. Oh, okay. Then another question about the revenue base. If the worst case scenario materializes and you lost 53 million of rental income, like 20% of your financial year to 26 revenue, how quickly can Perak Transit replace or rebuild this revenue base?
I believe this question is asking about if the trade receivables basically doesn't pay, and then it become a bad debts, for example, then how we are going to replace that, right? So I think the first of all is we have to put in measures to avoid that to happen lah, because that is a very big chunk of our revenue lah. So but I don't think the amount will be like up to 53 million lah, that much lah. Okay, so and then since they are actually already paying according to the installment plan. Okay, so I think this one is a very big chunk of the rental income. So we have to put in measures to make sure that they continue to pay according to the plan. And then if not, then we have to have a very close communication with the tenants lah. So any issues or with them and so forth. So we have to have a very close communications. So and then if you are mentioning on the replacement, first of all, we do not want this to happen lah. So we have to put in measure. Yeah.
Are you exploring regional partnership with logistic or transportation tech player for future terminals?
Yeah, I think we are open for any opportunities, business opportunities that is profitable, that actually can have a synergies with our companies and so forth. So we are not restricted to any players or business partner.
I think also quite similar this question. Will Perak Transit consider revising tenant mix or include experiential or community-driven tenant or to accelerate the footfall recovery?
I think currently our terminal still have vacant lots and so forth. So I think we can actually fill up those vacant lots with different kind of tenant mix. Okay, so that is actually aligned with what we are doing the business model. So if our terminal is like a supermarket and a center, like entertainment center and so forth, so we welcome any business partners or potential tenants that are interested to lease our spaces and so forth. So we wouldn't restrict lah if we want to change one floors to any different tenant mix or even activities and so forth. So but of course it depends on the existing tenants, the expiry lah, the contract expiries and so forth. So it have to be feasible and workable lah. So we are not restricted to anything lah. So if there is a good suggestions that actually can bring more footfall, crowds, more business to the existing tenants, so we are always welcome.
Okay, open to all who are welcome to rent. Okay. This question asking about the also offsetting receivable. And then are both operators still operation and pay according to the installment schedule? I think just now you also mentioned about it. Okay, then do you have anything more to add on?
I think as I highlighted, so currently they are still operating, so the still business as usual. So they are also paying according to the installment plan I said today.
Okay. Could you update us for the status of Kota Baru Central?
Okay, so for Kota Baru Central, so currently we basically put aside lah. So because previously there is actually some comments mean some come out some news from the Menteri Besar and so forth. So but we are also we wouldn't be restricted or we are actually also interested to talk to them again. So in regards to the Kota Baru Central, so we are not basically doesn't give up on this terminal. So if as long as there is opportunities, open opportunities to actually speak to the relevant person, so we are very happy to do so. So but currently we are focusing on our Toronto and Sri Iskandar and also some terminal management contract lah. But of course, we doesn't give up on Kota Baru lah. So if there is opportunities, we are always open to actually have discussions and then back on track lah in terms of the project plannings, the constructions and so forth.
We're asking for the project facilitation fees. In year 2024 annual report, project facilitation fees came from single customer is Maxima Timu Sandhya Berhad, which mentioned under IPO prospectus.
Correct.
Okay. Okay. Your receivables see as 53-day increment. Is that caused by late payment rental? Yep, just now Jennifer already explained it, and they will pay by installment. Okay. Asking about capex. Your capex has been rising, so is your profit, but the free cash flow has been reducing and slipped into negative free cash flow. If I'm not mistaken, how long will this negative free cash flow will continue? Is it because of negative? Yeah.
I think the past few quarters we are actually having positive free cash flow, no longer negative free cash flow. So so currently third quarter also positive free cash flow.
Is Perak Transit in a situation of financing is using debt instead of cash flow from operation?
Okay, so we are a very capital intensive company lah. So for example, we construct one terminal, it costs more than 300 million and so forth. So we will need financing. So for currently is from the Sukuk program itself lah. So that financing to actually part finance the constructions of our terminal. So that's why not only on the develop, own and operate model, we are also looking at the asset-light business, which is the terminal management contract. So which have a lesser capex, but give us a faster growth lah.
Asking the two upcoming terminal, could you provide the reason why you need to build two terminals for non-necessary Ikan they located near to each others?
Okay, so basically the target market is different, and both terminal is one is actually the express bus terminal, and then another one is the stage bus terminal. So that will be have a different dynamics lah for both terminal itself. Like Toronto will be focused more on the students and the local population. Seri Iskandar is more towards the looking adults at the general hospital, the patient, the family members, so and the local populations.
Two of your asset is valued at about 1 billion. This valuation from bank, and what are they, and what is the per unit valuation and rental yield for last year?
I think not two of our asset lah. So it's basically three of our completed asset, and then we have also some other asset lah. So for example, those that are currently under construction is also under the capital work in progress. Okay, so the valuations itself is actually valued by the valuer. But the valuer is the panel of the bank lah.
Okay. What is the average length of period for your tenant, and how long the rent your rentals pay? And in other words, what is the tenant turnover ratio? I think just now you mentioned it's quite long, like 10 years, right?
It depends on the type of tenants lah. For anchor tenants, so you can actually go up to 15 years. And then for the standard tenants, so normally is 3 years.
Do you have the record for the tenant turnover ratio?
So it depends. For example, those some of the tenant might actually doesn't want to renew after the expiries and so forth. So then we basically have some replacement for that tenants and so forth. So some is like they are not a very good paymaster, so we doesn't actually want to continue the rental with them. So we also have some replacement and so forth.
This is asking about Sukuk. According to our prospect of your Sukuk, the key tenant is essentially H Group, Sendang Berhad, and Casa Aman. Is this receivable outstanding coming from these companies?
Correct.
Okay, asking about dividend. Can I know why dividend cut half this quarter?
So this dividend 0.0025 per share is actually the same as the last quarter lah, which is the one in June. Okay, so why is it lower in June and September? Due to few reasons lah. So the first one is because before the share crash, there is actually a lot of shareholders that exercise the warrant. So because the warrant is going to expire next year, August. So, and then at that time it's actually in the money. So that is actually increase in terms of our total number of shares lah. So actually it will actually also increase the total payout to the shareholders itself. So secondly is also the directors would like to reserve some cash flow. So for the expansions of if there's any future opportunities and for our current business expansion purposes. So the director basically will reassess on the dividend every quarters and so forth.
Mm. He's asking about the Sensuria. How many percent of Sensuria bought in and why there is no announcement? But ethically, there's the right thing to do Pacific in the market.
Okay, so basically, normally there is no announcement, which means that they haven't reached the substantial shareholders of 5% yet lah. So because normally, if any shareholders that have reached the 5% threshold, which is the substantial shareholders, they will need to basically email to our company secretary, so to notify on this, and then so that our company secretary can make the relevant announcement. So if there is no announcement, which means that there is not a substantial shareholder yet. Okay, so basically, the Mako and Sensuria is currently shareholders lah, of our companies and so forth. So also friends lah, friends of our directors and so forth.
Okay, quite good. And then another question follow up, like, could you elaborate Sensuria role in Perak Transit going forward?
Okay, so I think we are open for any business opportunities lah. So if for example with the Marco connections and so forth, so if he can actually basically bring in business partners and also some opportunity to us, so we are very happy to basically to actually work with that lah.
Then another question asking about when Steve Tophon store will be open?
Oh no, so the Sutopho store that have already the contract have already ended lah. So we have basically also forfeited their deposit and so forth, because Sutopho is basically from Russia, so they have a bit of problem lah with their countries and so forth. So so it's not happening.
Then is there any upcoming tenant will come in?
So for example, for Terminal Maria, we have the event hall that already replaced this sort of lot.
Okay, there's another question pop up. They're asking about your bus terminal, and then how do you attracting new client due to the low traffic?
Okay, so basically we actually look at the occupancy rate lah. So like Meru is 80%, then Gampa is 70%, then Bido is 60% lah. So I not sure about the photo lah, the angle, the timing of the shootings and so forth. So I can't comment much on that. It's just that we look at the facts itself lah. So which is the current occupancy rate at our terminals and so forth. So that's what I can comment now.
Okay, then another cash flow follow-up question. Asking how many quarter have you done in positive cash flow and how much roughly per quarter and give because your high capex and how many quarter can give going on positive cash flow?
I can't recall how many quarters that we have when we turn into positive cash flow, but I believe that this year the first, second, and third is actually delivering positive cash flow. I think it's since last year lah. So this one I have to backtrack on the cash flow statement itself. So so basically currently it still has a positive cash flow.
Follow up for the occupancy ratio and retail lot and advertisement space for all your complete terminal. Do you have the detail for it?
Okay, so for Terminal Maria, so it's actually in our slide. So as of September that time, the current occupancy rate is 83% for Meru. Okay, so whereas for Kampa is 75% as of September, then Bido is 68% as of September. So this is on the shop and kiosk occupancy rate. So if you are mentioning our event spaces, advertising spaces, so that one is not taken into considerations because we have actually given exclusive rights to our media agency lah to list out all the spaces. So in return, we actually receive a fixed monthly rental from them. So we have passed on the occupancy risk to them lah, basically.
Also, just now you mentioned your target to achieve year-end occupancy target is 80% for Kampa Putra and 70% for Terminal Bido.
Yeah.
Okay. Last month, Lembaga Haji Investment Team visit Terminal Meru Raya for what purpose? Got any future big figures?
It's not the investment team lah. It's actually that I believe this question is about the Tabung Haji lah. So it's not the investment team. It's there are other team lah. So it's actually visiting Terminal Meraya to have a site visit lah for business purposes.
Okay. Okay. I think the rest is the share price question. Okay. What is the reason and why main shareholder been selling the share in large order over the past 2 months before this?
I think if you are talking about the crash on the 22nd of October, so basically after the crash, you saw that announcements that is selling from the major shareholders, from our directors, that is basically forced sell lah by margin call.
Okay, by margin call. Alright. Okay, how much of the share is disposed in both the GLC?
Okay, so I don't think we can comment much on this. So because if we are mentioning about institutional shareholders, of course there will be some that will sold, some that will actually invest and so forth. So I don't think we can comment much on their strategy lah.
Okay. Okay, share buyback. Will you consider share buyback to support the valuation?
So it is very much depends on the decision from our directors lah. So this one it depends on their decision.
Okay, why Dato Seri Chong Kong Fit and Dato Chong Bek Sui sold their share in Perak Transit?
I think this one is the same questions lah that we replied just now. So if you are mentioning after the crash itself, is basically due to the forced sell by margin call.
Okay. Will Perak Transit expand business to other states in Malaysia beside Perak?
Yes, of course. So even though we call Perak Transit, but we are not restricted in doing business in Perak alone. So basically, if you look at the terminal management contract that we secure is already outside of Perak lah.
Okay. Okay, asking for the cap. Would your JV with the CEB be ongoing? How would you finance the project?
Yes, it's ongoing because we are actually they are actually our suppliers for the smart bus stop. So the one that actually provide the smart pole itself. Okay, so our supplier for the smart pole. So and also we are working at the EV charging hub lah. projects and so forth. So, of course, this is ongoing.
Okay, asking about share price. Before the share block on October, director also sell more share this year. May I know the reason?
Okay, for if mentioning at beginning of this year, some of the shares are basically sell to institutional funds and also high net worth individuals and so forth lah. So then this one is in the beginning of the year.
Okay. Any plan to go for REIT IPO?
Not at this moment. So I think our asset base have to be big enough, strong enough to actually go for REITs lah. So, but again, we are open for any opportunities.
A follow-up question for CEB. How will you finance for the CEB Jerry Smart Post? What is the capex and then how long for it?
So basically for the smart bus stop and also the EV charging hub itself, for EV charging hub is actually zero capex because caps will basically provide the hardware and the software. So we are actually the landowner and so forth lah. So we will have profit sharing from there. So whereas for the smart pole itself, so the capex is very small, but this capex can be passed on to the MFPs, operators, and so forth.
Any reason why the long-term liability increased from year 2022 to year 2025?
If you look at long-term liabilities, the majority of the major components like is actually the bank borrowings. So if you are mentioning about from 2022 to 2025, there is actually new Sukuk tranche that we have drawn down lah. So the reason for the increase in the long-term liability is from the increase in the total borrowing.
This is a question asking about the yield. What is the yield on each of the complete terminal and what is the ideal rate are you aiming?
Okay, so if we are talking about the OpEx, so once a terminal being completed, so basically it will be profitable as long as we are able to secure the major tenants lah, the major revenue stream, for example, the advertising and the promotional spaces rental of it. So you are able to secure those, then basically when you operate, so it's sufficient to cover your OpEx. But if you are talking about the capex, because one terminal will cost you more than 300 million, so it will takes a longer period to recover lah. So it will actually more than 5 years to recover.
Another, what is your WACC and breakdown for your debt? And then which of your debt is recourse and non-recourse?
Okay, so all our debts are basically secure with securities lah. So we have asset being pledged, fixed deposits, and so forth. So basically this is which is majority is coming from the Sukuk program itself lah.
Asking about facilities fees. Why did the facilities fee decrease? On what basis are these fees calculated? And after a terminal has been fully completed, can the company still earn this type of income?
Okay, so for project facilitation fees, our role here is act as a consultant. So we don't involve in the constructions of that terminal, the operations of that terminals, and so forth. So we are the consultant at the preliminary stage. Okay, so we basically prepare concept paper. So we brief the customer itself whether is it feasible to build a terminal in that locations. So what is the components that need to be included, what is the populations, the demands, the cash flow, the construction costs, and so forth. So we will basically guide them from A to Z and so forth. So because in this industry is a very high barriers to entry lah. So before you basically construct a terminal, you need to get the local and federal government consent lah. So before you can construct, if not, that terminal will turn into a white elephant. So there's a lot of this kind of know-how that we need to share with them and so forth. So this is the role in this fees being charged. So the decrease is that all this while in every quarter we basically highlighted that there will be a lower concentration in this fees contributions. Okay, because even though we are advising on the terminals in a second tier cities or for the customers to actually develop is even either a bus terminal or mixed developments and so forth. So but you can't be advising all the terminals in Malaysia mah. So this eventually it will actually be reducing, and then one day our focus is always on the terminal management. So this fees is also very lumpy lah. So and then we are also very passive in this area. So we rely on the project managers to bring us customers and so forth. We just manage what we are good at, which is the terminal management itself lah. So this is an ad hoc revenues to us. But even said that, so our top line and bottom line wouldn't be significantly affected by this drop lah, because we have a lot of expansion plan in place. For example, this year is the full year contribution from Middle Central. Then we have upcoming 2 more terminals coming. Then we also securing more and more terminal management contracts and so forth. And then we have other business expansion like smart bus stop and so forth, EV charging hub and so forth. So we already see this coming, so that's why there is a lot of expansion plan being put in place to make sure that it doesn't affect the growth factors and so forth.
Mm. Okay. What is the impact of Ipoh Central project to Terminal Meru Raya? Would all express buses will no longer stop at Terminal Meru Raya when Ipoh Central complete?
Okay, so these are actually 2 different type of terminal. So Ipoh Central is stage bus terminal, whereas Terminal Meru Raya is an express bus terminal. So in a city, normally there will be 1 stage bus terminal and 1 express bus terminal. So existingly in Ipoh, there is also an stage bus terminal which is very rundown called Medan Kit lah. So they actually want to move from Medan Kit to this new project, new terminal, which is a very good initiative lah for us, because currently because we are operating stage bus so our stage bus also park at the Medan Kit, which is the facilities is not that great lah. So but with this new terminal being in place, so all our existing stage bus can actually move to this new terminal. So for us and for our employees is actually a good thing lah. So they have actually a better working environments, and then better facilities for the passengers and so forth. So this is something good lah. So something that a very good strategy or initiative lah to Ipoh itself.
Just now you mentioned assuming like a terminal is 300 million, and you mentioned like take 5 to 6 years to recover your capex. Yep,
It's
does
actually
it mean
more than 5 years lah. More than 5 years. It depends on the capex amount. So it can actually more than 5 years basically can go up to 8 years and above and so forth. So due to the amount of capex being incurred, but basically one terminal the lifespan, the useful life is for 50 years, 50 lah. So with proper maintenance, so that lifespan can even go further.
okay? I like this question. What is the major profit growth moving forward?
Okay, so basically, like I mentioned, this year is actually the full year contribution from Bidor Central. So the growth will be from there. And then moving forward, we have upcoming two terminals that currently under construction, Toronto and Sri Iskandar. So, and then we have also actively securing more and more terminal management contracts. And then also other business opportunities, for example, smart bus stop, EV charging hub, and etc. So all these are basically the growth factors lah.
For Bido and Kampar station, roughly how many years do you think it will take to recover the construction cost?
So the construction cost for Ido and Central is lesser, is less than 200 million. So the payback period is also shorter lah. So it's actually less than 5 years for these two terminals.
Less than 5 years for Bido and Kampar. I think there is the quite last question for this. What action will you attract the investor back because of the share price drop a lot quite for year to date?
Okay, so I think for us is that we have to maintain business as usual. So and then to actively securing more projects. Okay, so especially those that give us fast growth, for example, terminal management contracts and so forth, or even new business opportunities. So we still continue business as usual, and then to continue with the fundamentals of the companies and so forth. So basically, we believe that this confidence will slowly build up lah with the performance of the companies and so forth.
Do you mind to share for your upcoming profit growth and dividend payments?
Sorry, I think we can't disclose any forecast lah or projections lah.
Okay, thank you. Is there any business relationship between Central and Perak Transit? I think just now you also answered it like both of you are friends.
So currently we don't have any direct business relationship. If we have, then we will have contract being signed and so forth. So Century is a PE fund, so they actually help to advise, give advice to our directors and also to recommend business opportunities to our companies and so forth.
Yeah, high mobility. What are your comments about Causeway Link, high mobility, and Perak Transit? Simple for you are public listed bus operator company.
Okay, so for our company, basically we are not only a bus company lah. So we are if you can look at our contributions, basically majority is coming from the terminal itself. So we are actually a public infrastructures and public transportation company. Okay, so we are doing terminal operations, bus operations, and petrol station operations. So we are not purely a bus operator.
And then 60% of revenue is come from the rental.
Yep.
Okay, Centuria again. Will Centuria be appointed to the board? And yesterday, Perak Transit received mandatory plus any exciting news coming up in the pipeline?
I think this basically leave it to our board of directors lah. So it's actually a mutual mutual thing from both parties. So I think this one leave it to the directors itself. So for the Menteri Besar itself, so basically it's a courtesy receipt and also to updates on the existing business and also the future business in the pipeline and so forth.
Okay, I think this question about share buyback just now we already discussed. And yeah, do you want to add on this?
I think we have replied on these, so it is very much depends on the director decision.
Oh, tonight quite a lot of the question, and then we answer almost all of the question tonight. Okay, before we end, I will do a conclusion for Perak Transit Bhd. Perak Transit Bhd just now, they still continue to deliver steady and improving results for each quarter, supported by the resilient business model and proactive management. Like, for example, for the rental income is growth 33% year-over-year to 29.9 million in the quarter of 25 this quarter, driven mainly by the rising occupancy rate at Terminal Bhd Central, just I mentioned 68%, and Terminal Meru Raya 83%, and the Terminal Kampong Putra 75% continue to maintain healthy occupancy rate level. Also, management just now mentioned about it, they remain on track to achieve year-end occupancy target of 80% for Kampong Putra and 70% for Terminal Bhd Central. Okay, allow trade receivable pose a challenges for them, representing 60% of total receivable, but the company expect delay collection to normalize, but they still, the tenants still pay by installment. Even in the worst case scenario, the risk is partially covered by 2 months of security deposit, like Jennifer just mentioned. And the company also have strong cash position of 260 million that can reducing the financial risk. For construction progress remain manageable. Toronto Central is still remain online, targeted for completed in second half of 2026. And Seri Iskandar Central is also on track for completion by March 2028. So overall, we remain positive view on Perak Transit Bhd with financing for both new terminal with full secure. As the share price now year to date is dropped 63%, and closing price for today is 0.265 cents. And then is there anyone to add on, Jennifer, before we end for the webinar for our investor?
Just to recap again on the growth factors lah. So I think first of all is in regards to full year contribution from Bhd Central this year. Okay, and then secondly is on the actively securing for more terminal management contracts. So thirdly is that on the other business opportunity lah. So for example, smart bus stop, EV charging hub, and etc. So just want to recap just now the target is for the Kampong Putra Central occupancy rate is 75%, but moving forward is around 80%. So, but because currently is already December, so I think this one will be, we look at the next year target. So I think for Bhd Central currently already 68%. So we look forward to next year target around 70 to 75% occupancy rate. Thank you.
Okay, do one last question. Do company already start secure tenant for Toronto Central?
Yes, internal and also external outsourced marketing team is actively securing for tenants.
Okay, quite positive. All right, thank you everyone for tonight joining us, Perak Transit Bhd, and thank you Jennifer for us answering for all the question and presentation updated the third quarter of financial 25 earning result to us. Thank you. Thank you,
Okay,
Jennifer. Thank you everyone.
Thank you. Bye.
Have
Good
a nice
night.
day. Bye.
Bye.